Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and a very happy colleague of mine sitting next to me today.
Hello there, I'm Yatin Mota.
Yatin, a fantastic Friday. That's what I'm calling it. I'm not even just calling it Friday or Fantastic Friday. It's a fantastic Friday, given the fact that we're just about 200 points short of 26,000. Yatin, we are almost there. Another 1,000-point milestone, and look at the number of sessions we've taken, right, to reach from 25,000 to 25,800, and who knows, next week could be the week where we hit that 26,000 mark. But of course, good run. Of course, for a second straight week, we've seen gains on the Lal Street. The Nifty, Sensex, all of them, rallied somewhere around 2% or thereabouts. The Nifty Bank Index finally hit a fresh high today as well, right, Yatin? Getting past that 53,300 mark, 330 mark. That was the all-time high. But broader markets were also firm today. Midcap index gained somewhere around 1% or thereabouts. But for the week, the broader market has ended weak, because flat rather, in comparison to the benchmarks, given the fact that we saw 3 days of weakness coming in on the broad end of the markets. Breadth was firmly in favor of gainers. You had all the sectors ending in the green. FMCG pack, hit a fresh record high as well. Autos, metals, realty, these were all the other pockets that were doing well. I think some bit of underperformance coming in the Nifty IT pack, Yatin.
Correct.
Continues to underperform. But in terms of individual movers, you had the likes of M&M, that stock gained in excess of 4%. You had JSW Steel. Metal counters were upbeat because there was a note and upgrades on some of the metal counters, so they were up and about. L&T, Coal India, and even ICICI Bank, HDFC Bank, these are some of the counters that powered the index to fresh highs. On the losing end, you had SBI. PSU banks have not had such a great run, and SBI continues to sulk. Grasim, IndusInd Bank was among losers. Bajaj Finance, TCS, these were among the very slim list of losers today, Yatin. But broader end of the markets were also fairly active. Take us through the action there.
So, if you look at stock-specific action that continues on the Lal Street, in fact, today was the FT rebalancing also. The Sensex rebalancing also happened. So, a lot of stocks which were in focus. In fact, if you look at stocks like BSC for the month, they are up nearly 30-40%. Good moves coming in there. Today, ITD cementation, that stock was also in focus because the Economic Times reported that the Adani Group is in the final lap here to acquire a majority stake, and post that the stock went up 20%. As Nandita was mentioning, metal stocks were doing well. Commodities were doing well. In fact, stocks like HEL, BDL, the likes of Hudco, the PSU stocks which have corrected 30-40% from peaks, they are also witnessing some bit of buying. So, it was a secular bull market today. Obviously, stock-specific action continues. Intraday, we saw a dip because of the IT stocks. But yes, overall a good session for the Lal Street, including the large caps and the mid caps.
That's true, Yatin. Since you mentioned defense stocks, those stocks were also on my radar this afternoon. So thinking of starting with defense stocks itself, because they've had a very good run today after correcting almost 40-45% from all-time highs. They've had a dream run over the last year, but the last 7 to 8 weeks have seen the stocks correct, and how. Of course, stocks like Cochin Shipyard, GRSC, Mazgaon Dock, all of them have corrected 30-40% from all-time highs. But today itself, you saw stocks like Cochin Shipyard, GRSC, Mazgaon Dock, all of them rallying anywhere between 8 to 10%. Cochin Shipyard, I think, also saw inflows to the tune of $30 million or thereabouts on inclusion in FTSE All World Index. So that stock was in focus. Of course, we've seen very sharp profit taking in these names, right? But the overall sentiment on these stocks still remain on the buy side, because I remember reading a report from Antique where they had stood by their buy calls on some of these counters like HAL, BEL, Bharat Dynamics, Mazgaon Dock, and Garden Reach, and that's because of the recent Defence Acquisition Council's approval of projects to the tune of 1.4 lakh crore rupees, right? Since then, defense stocks have been in focus because they will be beneficiaries, because a lot of these projects will be sourced from these Indian defense manufacturers, right? Because the approved projects include future-ready combat vehicles and air defense control radars for the army, and patrol vehicles for vessels for Indian Coast Guard as well, right? So these companies will be a beneficiary, and the kind of moves that we have seen on defense stocks today, could signal that the worst may be over for some of these companies. Of course, we'll have to see stock price action for a few more days to actually arrive at a conclusion. But today's move really signals that there could be a fresh leg of up move for some of these defense stocks.
And I think, Nandita, the defense stocks have corrected also in a quite healthy manner with the order inflows and visibility. Probably second half could pick up and hence the move in defense stocks. But what moved in trade today was rate sensitive metal sector. Remember, we have the US Federal Reserve, which has cut nearly 0.5 percentage points in terms of rate. And probably that augurs well for metal stocks. And today steel stocks, especially JSW Steel, was flaring up in trade, up by nearly 4%. We also have stocks like Tata Steel as well as JSPL, a host of other stocks which got a positive rating from Macquarie. Now Macquarie has a target of 1077 on JSW Steel, and they believe the kind of operating leverage steel companies have, probably from here on if the demand picks up, that could aid margins. Number one. Number two, if you look at coking coal prices, if you look at crude prices, if you look at iron ore prices, they have seen a significant 20-30% cut from the peaks. So the commodity cost has also fallen for most of these steel companies. The input costs are falling. Probably, the demand is slightly lagging, but the kind of benefits that they have on the cost front are also equally better, which protects the profitability on the downside. Most importantly, we have the government also, which is proactively looking at dumping of steel from China as well as Vietnam. So some kind of anti-dumping duty or some action can come from the government side as well, which is probably auguring well for steel companies. So overall, I think given the fact that there is a rate cut which has happened, a possible rate cuts from the RBI and the global economies, that could support commodity prices, and probably that is the reason why we saw some bit of buying in trade today in steel stocks, especially after that Macquarie report.
That's true, Yatin. And global metal stocks, in fact, metal stocks will also benefit from a weaker dollar, right? And dollar has been weakening ever since we saw the Fed cut rates. But the other stock that was, in news today and was reacting to positive news flow was IIFL Finance. Given the fact that the RBI has lifted restrictions on the gold loan business, that was a big overhang on the stock, which has seen somewhere around a 12% kind of a downtick since the RBI imposed those restrictions on the 4th of March. Now, the company will be resuming gold loan operations in compliance with rules and regulations, and it has to ensure that the remedial actions that it had taken remains in place and it sustains. As I mentioned, the RBI had placed curbs on the gold loan business back in March. Restrictions were imposed due to supervisory concerns, and concerns including a breach in loan to value ratio, cash dispersal and collections were above the permissible limits, and of course deviation in certain gold purity as well. Gold loan assets under management for the company had halved from 26,000 crore rupees on March 4th to 12,160 crore rupees on August. This the company had disclosed during its first quarter numbers, Yatin. In fact, gold loans constituted somewhere around 21% of consolidated AUM at the end of the first quarter, vis-a-vis 32% prior to the ban. And over 1 million customers had closed their accounts till August 5th following the curbs that were placed by RBI. And the company has repaid somewhere around 13,500 crore rupees to banks from 5th March to August 5th. This was also made as a disclosure by the company during its first quarter earnings. But Jefferies has now come out with a report on IIFL Finance. It has upgraded the stock to buy from hold, and the target price is at 595, not very far from where the stock is today. Ended high by 8 to 9% today. And they have said that the gold loan disbursement should ramp up gradually. And it should normalize in the next 1 to 2 quarters, and the gold loan book should further come down to 9,000 crore rupees by the end of the second quarter, because of course the impact of this lifting of ban will only be felt in subsequent quarters, right? So the portfolio rebuild to pre-ban levels may take time with high rundown rates as well as difficulty in regaining the market share and customers, and higher gold prices. Of course, gold prices are near record levels, right? So that is something that could be a tailwind and aid growth for the company, and profit should also recover from lows and grow somewhere around at 50% CAGR, compounded annual growth rate over FY25 to FY27. And of course, the brokerage has also maintained that as IIFL rebuilds its gold loan book, the margin pressures may also ease going forward. Stock today up somewhere around 8 to 9%. But if you look at the last 6-month performance, I think the stock has done fairly well. Yeah,
it has done fairly well. But most importantly, stocks of Manappuram and Muthoot
were
down.
Fell today.
In fact, Muthoot was down 2.5% on the anticipation that competition is coming back in the gold loan space, because IIFL Finance is not a small player. They have nearly 2,500 branches from which they service a lot of customers. And obviously, South India is one portion wherein gold loan as a concept sells well. So yes, the competition probably scaring the kind of build-up that we have seen in the stock of Manappuram and Muthoot, in the anticipation that IIFL will take time for resolution. But I think in a record or a probable 2 quarters, they have come back with a bang, and yes, there is a RBI approval now. Let's hope that rally continues, and Nandita saying 26,000 is here on the corner. Probably on Monday you could see that level. Let's hope that there is a raging bull market for the expiry in September.
Let's hope so. This time we don't have a reason to say wake me up when September ends, because September has been doing fairly well. So that seasonality factor is not playing out, and major events are out of the way. So now we just have to watch out for that landmark 26,000 mark on the Nifty. But with that, we've come to the end of this edition of Closing Bell. Thanks a lot for tuning in. Have a great weekend and come back and join us on Monday morning with Opening Bell. Till then, goodbye from me and Yatin. Thanks a lot for watching.